All right, all right. Cool. All right, so it looks like we're live. What's going on, everybody? My name's Amol. I got Faisal on here on the call with me. We're going to be discussing Bitcoin, crypto, and then the stock market. We're going to start off with crypto for now. I think since the morning time and basically since the last several days, there's really not a whole lot that has changed. We've kind of just been slowly bleeding down, and this goes along with my morning video analysis that I did about, um, boiling the frogs theory, where you slowly turn up the temperature on the frog, and before you know it, you're down like 10, 20, 30% down in your portfolio. So it seems like that's kind of what's going on with Bitcoin. And I can't definitively say that we're definitely going down, but I think it's become abundantly clear, as per, let me see, there's a nice chart that I have pulled up here. This is the inverse chart. Let me make this non-inverted here on the 4-hour time frame. I think I've made it clear that this descending parallel channel has kind of given us a good idea of price slowly kind of trickling down, putting in lower highs every time it hits this descending trend line resistance. So even if we make it up into this green box, because Saturday is like low liquidity, low volume environment, the CME players are gone, GBTC players are gone, majority of the futures traders are gone until late Sunday evening. And so the major spikes typically that you see in Saturday volume are largely, in my opinion, to be ignored. Trade them at your own risk, but I always tell people that it's best to kind of stay away from the market on Saturdays and kind of just enjoy your day. you know so anyway, what we've been seeing is this rising wedge that I mentioned yesterday, and we finally broke out of it, tested that as resistance right there, and now we're slowly bleeding down. And GBTC, which is that product that we closely follow, which is the Grayscale Bitcoin ETF, you can see, on the daily time frame, you see here, on the daily time frame, it broke below that 34 EMA, which is something that we've been tracking for the last year and a half. And the 34 EMA is important, and it has been important since way the heck back here in February 2019. Catches it as support in May, support again in June 2019, support again in July, and then finally breaks down, uses it as resistance, sells off, and then again over here, uses it as resistance, sells off, resistance, sells off. Finally, once it breaks through support, pushes up, and then breaks through resistance, sells off. So we're kind of at the same juncture with the 34 EMA. On the daily chart, GBTC, which again controls a significant amount of the supply in the market, because remember, these are market traded ETFs. These are included in diversified portfolios in hedge funds and institutions who want to add Grayscale products as part of their diversified solutions, or they're part of pension funds. Okay, there was a Grayscale report that talked about in 2019. There were many pension funds who actually started to add GBTC as part of their portfolio, other hedge funds that started to do that. So when big players like that come and step up into the market, very likely that if, let's just say, the S&P 500 starts to see a sell-off, GBTC is likely to see a sell-off before that, because again, it's a high-risk asset. It's directly correlated to the underlying product, which is Bitcoin. So, my theory of Bitcoin being more bearish for the next, several days, several weeks is still playing out. I've literally been short what seems like forever. I've been short basically since end of May back here. I got stopped out right here, re-entered shorts back here. And so I've still been sitting in my short. I'm up, I think, $500 in profit on the position from $9,800, $9,700 to where we are right now, $9,260. I've also told our Advantage members that I picked up some put options for June and July contracts for Bitcoin, and this is on the Deribit exchange. I've spoken about why Deribit has a bunch of options contracts expiring by the end of this month. And because this is a quarterly end, you typically see rotations out of the stock market, whether it's in different sectors, maybe in bonds, maybe pensions potentially selling off. Another article that I posted in the Advantage side. There could be numerous factors for Bitcoin to sell off, but I think there's very little factors for why Bitcoin should push up. Um, Now, if we tie that back into the stock market, you know, we had kind of a down day, and this is why we have Faisal here to talk about the stock market today. And so, with that being said, let's get into it. Faisal, what's going on?
What's up, man? How are you doing?
Good, good. I think your voice is a little muffled.
Oh, is this better?
Yeah, yeah, a little bit better. Yeah,
Okay, let me see if I could just move
that,
that.
that's actually that's a lot better. Yeah,
Oh, okay, great.
yeah. So, how was the day today? And what's your summation for this entire week? I guess.
Yeah, well, I came into this week really expecting some volatility. It was a prove it week, especially after the insane day we had last week where we went down 1,800 points. The main thing that I was looking for was a continuation of that pattern in terms of high volatility to the downside. But man, did we not get it. And I was really expecting it to come in yesterday. And I started to see a lot of the value sectors shore up a little bit after showing a ton of weakness at the close, I believe Wednesday. The financials, energy, and I believe small caps just were either below key support levels, just barely below key support levels, or they just barely closed above it. So it really put them in contention to create a lot of downside if there was a significant down day in the futures market where the market would open down, 200, 300 points. It would put those sectors below their key support levels. And so even though that actually did happen, I believe it happened Thursday, they were able to bounce back and retain enough strength to where if you guys follow me on the Discord, I covered the majority of my shorts around 12 o'clock, 1 o'clock. I got out of Southwest Airlines. I got out of Visa. And I started to go long. I went long AMD and what was the other one? Boston Beer. Yeah. And so both of them have been pretty well so far, but the market today was pretty much a continuation of yesterday. Um, there was not really any direction, but once again, I wasn't looking for any clear reversal sign or anything. I was just trying to make sure that if this market showed some downside volatility, then I think we could be in a continuation of uh, a more extensive pullback that would probably last maybe another week or another 2 weeks. And that could bring us down maybe 10 to 15%. But we didn't get that. And
Yeah.
judging from where everything closed this week, I think it sets up for next week to be definitely a more positive than negative week.
Yeah, that's kind of my thought process too. I think so. I was actually watching AMD, kind of like yourself. I'm still in my Beyond Meat position, which we actually announced to our members, the Advantage members, beginning of this week, I think. And so that one has done pretty well so far. We entered at 150.65. So right now we're up about 4.8%. The other position that I was watching and I'm thinking about getting into is Spotify. And but it,
Ooh.
it actually broke out just earlier on the week. So I'm really annoyed that I didn't set an alert for a breakout above like 198.
Oh,
But
damn. It's
yeah,
up huge. Oh,
yeah,
shoot.
man, it took off like 10-15% like a rocket ship. I think around Tuesday or Wednesday. So I was really annoyed that I missed pretty much this gap right here. And when I saw this pulling back, I was like, okay, well maybe it's gonna maybe fill in this gap. I might be able to re-enter, but it just kept taking off.
Yeah, I mean, damn, it looks like is it cuz this I'm reading some news right now. Is it cuz Kim K signed an exclusive podcast deal? Is that why she created like billions of dollars worth of market value in a couple days? That
I
can't
mean,
be it.
no, well, I think Spotify's pretty much been on the radar for more upside potential because they signed Joe Rogan for that exclusive deal. Now they're getting into a deal with Kim Kardashian. It really seems like they're trying to be the frontier leader in this podcast space. And to be honest, I think podcasts are where things are headed towards. Like, I really don't see the reason why so many of these news outlets, so many of these TV channels still exist because the entertainment industry seems like it's slowly shifting towards the more individual characteristics of how these podcasts are produced because they express individual opinion. It's not the opinion of a network or a lean or a bias. So I just find podcasts far more entertaining and useful. And I think Spotify recognizes that, and they're placing a huge bet with Joe Rogan, Kim Kardashians of the world.
Yeah, no, I agree. Entertainment's becoming more broad as time goes on and technologies develop. I like podcasts because they're kind of like an intermediary, intermediary entertainment product, kind of similar to what music is. Like you can listen to it. It's obviously just a listening thing, but you could listen to it during multiple times of the day. Like, you could listen to music during multiple times. You're not necessarily going to watch TV, be able to watch TV all the times during the day, but definitely listening to things and having this kind of entertainment outlet is the way to go. I think this is it increases the amount of capacity that people can spend on your product. And I think, making a push towards not only podcasts, but they're also a big player of music. They're in the right direction in terms of entertainment products, in my opinion. But I know there's a ton of people shorting the stock. I think it's a really highly shorted stock. So I'm not surprised that if you look at over the past 2 days, damn that volume shit. I mean, oh my God. So I want to say on the 10th of this month, I mean, the average volume, they were trading about a million to 1.5 million shares a day. In the
Yeah.
last 2 days, it went up to 12 million Thursday, and then another 12.8 million Friday. I mean, that's insane amount of volume.
Yeah, it is. So are you saying that this could have been caused due to a short squeeze, or are you saying now that there are shorters up here?
No, I'm saying this move that we saw is probably a short squeeze. I don't really know because I can't see a directly positive catalyst. I mean, unless Kim K still got that much power, like I can't see a buying catalyst. Any type of news in the last 2 days, it must have been either short sellers got spooked and they just decided to completely cover their positions or something. But that goes to show
Yeah,
you. That goes to show you, like, if you guys really want to make money on volatility, look for the stocks that have high short interest because a lot of times, sure, people are shorting stocks that are justifiably they should go down, but there are times where they're wrong, and when they're wrong, it really makes for the stock price to jump up in a huge way, like we see in Spotify.
yeah, that's a great point about paying attention to the short interest volume. The one other thing that I'd probably recommend our users or viewers to pay attention to is the put to call ratios on individual stocks too. If you pay attention to what's happening around the company itself, and you either see it positioned heavily in one direction or another, and the put to call ratios are not reflecting that, I personally think it's a good opportunity to take a chance, either on an option or even the stock itself. Again, not investment advice, but that's how I would do it. I'd rather play the odds where the market is showing that there's favorability to the one side, but people are not looking at the right pieces of data where there could be, short squeezes like Spotify.
Yeah, totally agree.
So Faisal, how did the individual sectors kind of look today? I didn't really get a chance to read your analysis this morning, but I saw that yesterday's analysis was quite broad, and you were very verbose and always like pretty detailed in your insight, which I think our viewers definitely appreciate. Here's some of Faisal's analysis for those of you who are watching on YouTube. He puts out these long pieces, and I think they're really good. At least at most, it's like a 5-7 minute read, but it's a good, healthy read because it gives you a good insight on exactly what Faisal is watching on a day-to-day basis. So very informative. But I'll let you continue and sort of give us a summary of what you've seen so far.
Yeah, for starters, like if y'all don't really like to read that much, I'm sorry. Last night, I just felt like reflecting on a lot of the mistakes that I had made in the quarter, as far as where I was positioned, because I was heavily positioned in healthcare during this recovery, and while it was really good in the beginning, it started to teeter off. I want to say a couple weeks ago, and really flattened out. And so I just wanted to kind of go over that and walk people through as to why some of the reasons it may have teetered off or where we went wrong as far as positioning. Because when you looked at the healthcare sector versus other tech sectors, both of them are growing I'm sorry, other tech industries. There are a lot of industries within the healthcare sector and the tech sector that are growing at double digit rates. And as we've seen in this quarter, and definitely during this recovery cycle, it's the companies that are expected to grow 2021 estimates at least by double digits on top line and definitely bottom line. Those are the ones that are winning the most. And companies like
What are
Medtronic,
some of
Abbott,
those? What are
um,
some of those examples so I can pull up the charts?
so Boston Scientific is one that I think is a really good company, BSX. Medtronic, I'm currently in that one now. And then Abbott Labs is also good. But the thing was, I was kind of comparing them because these stocks should perform with kind of the software stocks. Not only are they seeing short-term catalysts as far as uh, the need to innovate because of what's going on with COVID. It's not just about developing a vaccine. It's about developing treatments, different types of tools that'll save people's lives. And so it's a whole new innovation cycle being born in this specific industry. I'm speaking on the medical device industry. But I thought that I would see the same type of momentum draw out in that industry like we see in the software industry that's seeing massive adoption due to people having to work remotely. But that was not the case. And so I just had to walk through it. Just if you guys had time to read it, I hope it wasn't too much, and I hope you guys got some good information out of that. But the point was, all growth is different. Like I can sit here and talk about you need to invest in high growth stocks or stocks that are growing double digits, but in the end, it has to be backed by um, some solid thesis or catalyst. And even then, you may not get it right. It's just about investor sentiment. Like I still am in these medical device companies because I truly believe in the long-term growth runway and the short-term catalyst. But, you know, it just software ended up doing better during that same time. But hopefully in time, investors will come to realize that there is the same amount of potential for innovation and growth in those sectors versus software, which seems to me like it's crazy. Like people are just throwing money at any software name because I get it. The adoption rate is awesome. Okay. Everyone is using software. Everyone's trying to work remotely and companies are trying to become smarter. But at what point does every software company get in the way of each other? And I think this week was very important because we kind of got a hint of that in Oracle's earnings. Now, Oracle is a company that is mainly a hardware company, and it's been trying to transform itself into a software company. And, they were kind of on track before this quarter. I think there was a lot of optimism in terms of whether or not they could actually achieve that transformation. But this quarter, they really missed out on earnings. And I think that the uh, the reason why is because, or I'm sorry, not the reason why. The reason why they missed on their cloud earnings, and they were not able to execute on as far as cloud, um, as far as getting that audience for their cloud products. There's just too much competition, and right now we're starting to see that at some point, all these companies that are estimating, 2022, 2023 earnings to be double digit, at some point they're going to run into each other. And at these current valuations, I think if you're buying a lot of these software stocks for, the next 5 to 10 years, I think that's a very big mistake, even though they seem to be the hottest thing right now and they're backed by real innovation. Because at some point, I think the industry will consolidate. You'll have players like Microsoft that'll end up eating alive a lot of these software and cloud companies because they're just so broad and they'll be able to offer the most unique value proposition to any customer. And they probably will have pricing power because they're able to cut prices. They have large amounts of cash and they can withstand any type of headwind. So that was just a little rant about that. I like to talk about that stuff sometimes, but
No,
yeah,
I think it's a very important point that you mentioned. Like, uh, people are kind of throwing their money not only into software. I mean, I think pretty much anything that's kind of flying or hot for the week. There's, I was actually watching some videos on CNBC, Bloomberg. Everybody is discussing the almost deadly scenario that is posed for the average retailers and the guys like Dave Portnoy, because I think they're all thinking that this market is just going to keep perpetually going up. And doesn't matter what you throw your money into, because the Fed is also kind of given that indication like, hey, we're going to backstop the slides in the market. So it's a dangerous precedent that not only the Fed has set, but it's almost given the credence and credibility to the average trader like, hey, we can't go wrong when we buy pullbacks, or we can't go wrong when we buy stocks. So my question is, like, do you really blame people when we've created, in my opinion, such a bubble or confidence mindset in the stock market or even software?
Yeah, I mean, I guess so. I think software is a sector that has not seen the broad retail investor participation that, let's just say, the airline sector has seen. So it's a little bit different. I don't know how to really answer that question right now. I got to think about it a little bit. But there's just a lot of over exuberance in different sectors, definitely. I think the airline sector, even though people, when they buy it now, they're expecting it, okay, people are going to end up traveling again. People are going to, we still have a lot of money in the, at least in America. If you look at the discretionary income numbers and the savings rates, people have a lot of money and they want to spend it. So, on hindsight, I get why some people would want to buy things like the airlines and everything like that, even though now there's still so many headwinds as far as COVID is concerned. But they're also not taking into account that airlines may never get back to their peak volume that they had before. And that's because business travel itself is going to be completely changed. Whether it's products like Zoom, or I think Citrix was like the first video conference application, but Zoom has really taken off. Um, Different things like that will cause people to not travel as much, or I'm sorry, cause businesses to not send their salespeople to travel as much or send executives to travel. People will be doing business differently. And I think that directly affects the long term volumes that airline will see. And they have a lot of planes. If they don't have the volume to do that, I mean, that's a lot of dead asset right there if that volume does not come back to the same degree. And for people to ignore that, it's just a little bit of over exuberance, but I can't blame them because they're on the opposite side. There are still positive catalysts. Like, who knows? I could be wrong. Business
Yeah.
business travel could end up coming back. I don't think it will, but it could end up coming back to a fair degree to where a stock like United Airlines, that's seen almost all of its business travel drop, may end up coming back 80%, and that's good enough to lift the price up, another 10 to 20%. But for the most part, yeah, people who are buying it now, I think it's just, you're just kind of hoping that the risks go away. And I think it's too early to assume that.
I was actually just reading an article today about how the recovery post Spanish flu was, and it supposedly took anywhere between 30 and 40 years for trade, travel, confidence, and consumers, and the overall damage done to the economies to come back. Almost 30 to 40 years. Now, again, let's just say the world has greatly transformed, and we are far beyond, far more capable of handling COVID-like situations or Spanish flu-like situations, due to, let's just say, the Fed's ability to manage the sell-offs in the market, buying up corporate bonds, et cetera, right? But still, I mean, at some point we have to be able to learn from our history, as well as see the damage that has been done in front of our eyes. Like, okay, if you're talking about quarter over quarter or month over a month of recoveries, that's not really a fair comparison, right? Because if you're looking from May to May, or May 2019 to May 2020, well, retail spending was still down, I think almost 2% or 1.9%. So is it really the best?
Hello? 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 Yeah, hello. I think you cut off. Is it really the best what?
Oh, no, I was saying that the numbers themselves could easily be bent to effectively, be seen in a positive or negative light, because If you're looking at retail numbers or retail spending month over month, that's not really a fair comparison because it's like going from negative 99 to negative 95. Of course, you're going to see a massive jump in numbers, right, in terms of spending. But if you're looking from a year to year comparison, just like you can't do quarter over quarter comparison of GDP, you have to look at it on a yearly relative value basis. That is the true comparison of the havoc that has been sort of wreaked on the economy, if you really want to look at those numbers in a objective manner.
Yeah, sure. I completely agree with that assessment. I just maybe people are projecting or investing in the trajectory versus the actual relative numbers from this year versus last year. So I think that that could be it, but I wouldn't pay attention too much to the actual amount of retail sales, more so, like I said, the trajectory. As long as it continues to go up, that will be enough reason for people to buy at least the big retail stocks. Like today, for instance, we finally got some movement in Walmart and Target. And Target was up like freaking 5% at one point today for I don't even know why. I was trying to look for some news. I don't even know why it was. But you're starting to see these stocks move. And I think it goes along with the case that, yes, while there is still a lot of bankruptcies and retail overall is still down because I think people are not going out to shop, obviously. They're still doing a sizable amount of shopping, but they're doing it at more selective places. And so I still think, Amazon, of course, is the most obvious winner. But
Mhm.
stocks like Walmart, especially, I think Walmart may have hit a bottom today. Not investment advice. I just that's my own personal opinion. We'll see how it does from here. But Target also looks really good. So even though if you're scared about the overall retail numbers, I don't think you should stay away from the really strong retail names that will obviously I think benefit from a more um, restrictive environment where people don't go out as much. As long as you have an online platform as well as solid distribution, no interruption to the supply chain, these big cap retailers should definitely benefit in the long run.
Yeah, I don't think I want to sort of be as bearish or irrationally bearish as I would say I was late March or early April, or all through April, pretty much, because I think that the Fed has pretty much made it clear, abundantly clear, that the stock market will have support from the Fed, one way or another, whether they're directly buying securities, which obviously I hope they don't, or they support it through other measures like buying individual corporate bonds or giving the stimulus packages or providing these loan relief programs. Somewhere or another, the Fed is kind of there to say, hey, we got your back. And so for me, I think the biggest realization that has come about is that the Fed is incredibly powerful, possibly even incredibly stupid, but powerful nonetheless, because it seems like what they're effectively doing is they're saying, we don't really care about the repercussions of anything that happens in the future. What we're going to do is control any slide in the market, and we're going to try to do whatever it takes to get the economy back on track. And even Jay Powell had stated that this debt that we're sort of creating in the stimulus program that we've effectively created, I mean, it's pretty much gone out of control. I think his words were unsustainable, right? And so I think he's effectively saying that, let's be real, like we're never going to pay off this debt, you know. So either there's going to be a huge debt jubilee, which is something that the bigger finance networks have talked about, like Real Vision and Hedgeye, which would effectively mean that the debt jubilee would try to eliminate debt across the board, giving everyone a clean slate, which would be the most insane thing, but at least it would sort of balance and level the playing field. Or we continue on this path and we head towards an unsustainable future where the United States debt gets to a insurmountable price or debt value that we would probably never repay. And then down the line, maybe our asset bubbles pop or our dollar depreciates. We have no idea of the repercussions. But I think Jay Powell has kind of made it clear that for the near term, you better not be shorting the market. That's effectively
Oh,
what he's
that's for
saying.
sure. Yeah. Oh, yeah, that's for sure. If you're, I mean, Hell, I tried shorting this week and I barely made money. Like it's so tough to short in this market. There are so many better opportunities on the long side, and you don't really have to play the over exuberant ones, the ones that like you don't have to play the airlines or anything like that that have a lot of baked in risk. But there are definitely opportunities, and the volatility in the market is giving you those opportunities. So when you get those big price dips like the one we got last Thursday, it looks like it may have been a buying opportunity, and we got a 7% drop in the entire market. I mean, some stocks dropped 10% in one day. And so
Yeah.
you're getting those discounts. Like these types of moves used to happen over the span of, a couple weeks or a week or two. You're getting those discounts in a day, and it takes a lot of guts to kind of pull the trigger on days like those, but it seems like that's just how the volatility is playing out in this market, and that's how I guess the market is kind of cycling through its overbought and oversold signals as it continues to go higher.
There was a funny quote by one of the Ethereum founders. His name is Vitalik Buterin. He's the creator of Ethereum, and he said that we were hoping that blockchain and crypto technology would become like the stock markets or individual companies. But in fact, what really happened was the stock market and the individual companies more so became like the crypto market, which is these overinflated assets that are moving like Ponzi's. And I don't know how much credence to give to that, but like it's definitely in many ways true. I can't definitely say that all companies are Ponzi's and all of them are overvalued, because valuation is really determined by buyer and seller who are trying to figure out how much this company is worth in the future. And who's to say whether Fassel or myself or anyone is going to figure out, like in 5 years from now, what is X company going to be worth. So it's purely a speculation game. But I just thought the comparison was hilarious because, I've seen the crypto market move in and out, since 2016, 2017. And it was a bubble and a Ponzi bubble popping. And, now what you see in the stock market, when you see companies like Hertz or the bailout companies, or, these random traders like Dave Portnoy start talking about, buy so and so stock because he likes the abbreviation of the ticker, then
Mm.
you're like, holy crap, this is a very dangerous game.
Wait, you don't do that? That's like the best way to choose. That's like the best way to choose stocks. No, yeah, no, it's like I'm not gonna lie. There are definitely feelings of euphoria, and there are definitely feelings of the fact that if you throw money at, well, that's the thing. I don't think if you throw money at anything, you're gonna make. It's not bound to make money. I think the market is still moving in a very rotational type way. I believe bank stocks were really hot amongst Robinhood or retail investors. I can't remember which one. For about 2 weeks ago, they started to see a lot of inflows from that trading group.
Well,
And
just sorry to interrupt, but Bank of America is actually one of the more widely held stocks in Robinhood.
oh, okay, so yeah, so they've really been piling on to financials, and financials really haven't done anything since their big move. So yeah, you could think, oh, I'm throwing money at Bank of America or JP Morgan because it's still down 30% from its high, but they're not really doing anything. But on the other hand, you're having stocks like Apple make another all-time high today. Amazon, I think, was close to making an all-time high. You're having a lot of these software stocks that are not retail owned. Like I think we talked about Avalara this Sunday as a stock to watch. AVLR, it has done, I think it was up 10-15% this week. Same with Blackline. Blackline was another one we mentioned Sunday. It was up, I think, 8 to 9% in one week. So you're seeing a lot of these names that are obviously leading in terms of cloud innovation, because investors are really betting on the 2021 2022 growth cycle. Those are the ones that are actually seeing that euphoric rise. But it's not happening in the airlines or the really heavily bought retail stocks, except for maybe for Apple or um, what's another one? Oh no, Microsoft. Yeah, Microsoft. I think Microsoft was pretty widely held. But yeah, I think it's very secular. This type of euphoric environment, people are just throwing money at certain names and saying it's going to go up. And honestly, they really haven't. But I guess when you look at things from online and um, it tends to, what's the word I'm looking for? It just tends to make everything bigger than what it actually is.
Yeah, yeah, fair point. Let me see if we could take some questions. So, let's see here. Um, yeah, we are living in the biggest bubble, in my opinion. Stocks and the Fed. Yeah, quite possible, man. Let me see here. Who elects the Federal Reserve Board? I think it's actually appointed by the President of the United States, and then I think the Senate confirms it. Um, Let me see. I feel like if markets crash or people lose money, most people just blame the president and whoever's in the Fed don't face any consequences. So they have nothing to lose by doing their experiments because they cannot vote for them but can for the president. Yeah, that's actually true, Andre. I do think that I find it almost reprehensible that there are not more people annoyed and pissed at how we've sort of grown the debt bubble, inflated assets, or what we're doing right now. I'm surprised that more and more people are not talking about this. Obviously, this isn't to downplay what's happening in the real world, which is, coronavirus fears or the protests that are happening. But excuse me, I think we definitely need to start giving more attention to what's happening in the fiscal and monetary policy of the United States.
Yeah, I want to. Yeah, I kind of agree on that. But once again, when I start thinking about these things, like I don't know what the hell is going to happen. I try not to overthink about things that I really don't have a grasp of, and I don't think anyone kind of has a grasp of where we're going as a result of what we're doing now. I think there is a lot of risk, but at this point in this market, what it's telling you is we kind of don't care about the risks because we believe in 2021 and 2022, at least as of now, is expected to be a record year for corporate profits and earnings. Whether or not you believe that, that's another deal, or whether or not you believe that the Fed is doing will affect asset prices at that timeline, but that's the narrative now. So I want to encourage people that even though I know there's a lot of information out there that can scare people, it's important to act that we all don't really know that much about the whole economic scenario or how everything will play out. So don't get too afraid of investing, even if you're reading
Yeah,
all that negative stuff.
it's funny you mentioned the idea of not knowing or understanding what's happening behind the curtain of whether it's the economy or the government or policies. There was this article or this video I was watching about Franz Kafka, and Franz Kafka he's this famous literary author from like the 1920s, and basically he wrote all these pieces and articles and books which are kind of like about the craziness of the world, the craziness of life, and the anxiety and depression that he was kind of dealing with. And he wrote this book about it's called The Trial. And so the trial is about this guy who lives in a society where the government and the policies and the economy is sort of so obscure and hard to understand that most people are just kind of going along in their day-to-day life, and they don't really care what's happening, right? As long as they get a meal to eat, they have the resources, just the normal day-to-day stuff that makes them feel safe, they're happy with it. They don't care what the government does. They don't care what the economic policy is. They're just going along with the system. And so one day, this guy, he has police knock on his door and they take him in and they say, "Hey, you've committed a crime." And the guy asks, "Well, what's the crime?" And the police and the judge, the prosecutor, are not actually able to explain to him what the crime is. And so this goes on for days and weeks and months. And eventually they throw him into the jail without ever explaining to him what the crime is. And they tell him, as like a slap in the face that, well, it's not our fault that you didn't understand the law. He's like, well, I don't understand the law because you haven't told me the law that I've broken. This is, I think this is the sort of general summary and understanding of most people in America, that we have no idea how this shit works. Everyone is just trying to figure things out. and let's for now hit the buy button on stocks. I feel like that's the point at which we've come in society.
Yeah, no, definitely. I think people, especially during this cycle, people had a lot of money. They got extra stimulus from the government, and the numbers that have come out, it's shown that yeah, people have just wanted to press the buy button and invest in assets that they felt like were depreciated, because they probably feel like they're going to be fine in the next 2 to 3 years, which is it's a like I think it's a normal way to think, in terms of whether or not you think you're getting a value on something like a stock. And I just I don't know if people need to assume a lot of risk at this point or they don't, but you know, it's always worth, I think people are always worth taking a chance, or I'm sorry, Americans especially are always willing to take risk. And I think that's been proven time and time again. And I think what we've seen now is an exact indication of that with how much they've been buying the stock market.
Yeah, I would say that's a fair assumption because the American consumer is by far the strongest and most prosperous consumer in the world. The way
Mhm.
the American sentiment and consumer feels is generally, I think, directly tied to how the stock market is doing, right? And I think that is like the general reasoning how people dictate. Okay, well, if the consumer feels fine, the consumer confidence is there. That's why we have the Consumer Confidence Index, right? The CCI. If the consumer feels fine, and we're predicting that 2021, 2022, the consumer is going to come out and start buying up things, houses, iPhones, etc. Hey, then there's no reason why stocks should go down. And I mean that's not totally wrong, to be honest.
Yeah, and not only that, the capex cycle. These businesses are sitting on a ton of cash. A lot of these businesses, big corporations, the capex cycle that's going to hit once the uncertainty clears up around the COVID is expected to be huge. So, I mean, that's also contributing to what you're seeing in a lot of the software names because a lot of these big companies are integrating multiple layers of software in their company, but it's going to be done even on a bigger scale once this COVID uncertainty is lifted and companies can feel more comfortable about spending that huge capex buildup that's been stalling ever since this COVID-19. Actually, since the trade war started last year, I think that's when we first got hints that companies were restricting capex and were really waiting for more clearer weather to disperse that capex.
Yeah, I totally agree. Let me see here. If there's any other questions? So Faisal, let's do some stocks, right? Let's talk about some stock picks, maybe short of the week, long of the week, something like that. Um,
Yeah. Well,
one,
I don't have my short of the week or long of the week. I'll leave that for Sunday. But there are a couple of stocks that did really surprise me today. There's a stock. So if you guys read a little bit in that huge blurb that I put out last night, I did mention that the biotech momentum trade may be starting to come back. And I was lucky. I managed to get into a biotech company, a really my favorite biotech company, ACAD, around 2 weeks ago. I put out an alert for it around 46.20, and that stock has just done phenomenal. And today it finally um, showed me really strong volume, broke out above a ton of short-term momentum signals, and I think if the biotech momentum trade will continue, this stock is very close to breaking out. And when I compared, because I look at a lot of when I invest in a stock, I kind of compare it to its peers, whether or not I like it better than another stock. This stock, it really stood out to me in terms of consistency of its earnings. I think maybe only one time in the last 7 years it dipped on earnings, which is really rare for a biotech company. First of all, usually they're all over the place because biotech is just kind of like a hit or miss dart game. But Acadia Pharmaceuticals is a company that I think showed a lot more stability. And just today, I think it was up 5%, 6%. And it looks like it wants to break out beyond that cup and handle.
yeah, yeah. You talk about this cup right here and this handle right here, right? Let me draw
Yeah, I
that
mean,
out for.
yeah, exactly. Kind of consolidated pretty nicely. And that's when you kind of saw the entire industry consolidate a bit. When I said healthcare stalled out, biotech was the leading industry in the healthcare space during the recovery. And so when it started to stall out, the entire sector ended up stalling out. But now it looked like it's picking back up. So keep an eye out on this one for next week. I expect this one to break out in pretty nice fashion.
For sure. Um, for those of you who are watching right now, again, we don't provide financial advice. All the opinions here expressed are simply our opinions. Faisal and I do our best to trade the market and show people visibility in everything that we're doing. And that's why we have our Advantage community right now, where we provide a 50% discount for our membership. So this is our Discord channel. All the lock channels that you see is all the amazing information that you are missing out on. Like I showed you before, Faisal puts out daily equity updates. We have videos like this Wednesdays, Fridays, and Sundays where we discuss individual positioning for our Advantage members. And our Advantage members, I think we have about 60 or 70 members. And, for the most part, everyone is pretty mature. No one is there to just come in and start asking random questions like, hey, which stock is going to go up tomorrow? It's usually mature people who are looking at the market from a broader, more long-term horizon standpoint. So I really appreciate our members for being a little bit more level-headed than your average, Twitter troll. So let me see here. So yeah, guys, 50% off. Make sure you guys come join. We've spoken about Bitcoin and my views on Bitcoin. I still do think that we're probably going to keep rolling down. It is Saturday coming up tomorrow, and weekend volume is typically dismal. So do be careful. I think Faisal and I concluded pretty much that we're expecting somewhat of an up week, or at least a positive Monday opening, correct?
I don't know about Monday, but definitely I'm expecting the week to end positive next week based on where a lot of the factors closed, whether it was leadership stocks or the value sectors. I think also just to keep an eye out, I think energy is as a sector to keep an eye out on. So next week, I'm really expecting energy to see some increase in volatility, but I don't know if it'll end up playing to the whole COVID-19 storyline where, as we saw before, when COVID hit, the demand of oil just significantly dropped as a result of the lockdowns being in place. But even though COVID-19 is spiking up now, I don't know if I don't think we're obviously going to see that same drop in demand, but I think we'll see some drop, and it'll be interesting to see if that creates some volatility in the oil industry. And you may think it'd be negative, but I actually don't think it's set up technically that way. I think the sector is actually set up to go up next week. So that's something to keep an eye out on for next week.
Yeah, fair point. Last but not least, we discussed the dollar a little bit, Faisal. And on my Twitter, I actually have a really great retweet from Lynn Alden. So I listen to her quite a bit. She's a very smart individual, very great macro and FX trader. So she has a really great discussion on where she sees the dollar. Also, a pretty big dollar bull is Santiago Capital. So this one right here. These guys have developed a theory called the dollar milkshake theory. You should totally go, read into it. There's a bunch of YouTube videos on that to understand how the dollar is probably going to get stronger through this next bullish cycle, if it does happen. So yeah, make sure you guys go check that out on my Twitter in terms of the thoughts on the dollar. In my opinion, I still do think the dollar is probably going to climb up maybe in the next week or a couple of weeks. And this is, I think, the thought process of Santiago Capital as well as Lynn Alden.
Yeah, I just want to comment on the dollar. I think at this point, because of where global equities are, excluding U.S. equities, I think if we start to see a rise in either EM stocks or European stocks or definitely Chinese stocks, that will cause the dollar to end up selling off. And I think based on where those markets are, they're still trading very low. If they start to go up significantly because they see some type of increased volatility, I think that would be the main catalyst that would drive the dollar down. But other than that, technically, it looks like it still wants to go up.
Yeah, yeah. I think for now it definitely looks like it's positioned and poised to go up. Um, Usually when the dollar has started to garner more strength, you have seen a bit more negative correlation on the equity side. So for those of you who are watching, do be careful, going into next week if you do see the dollar pop aggressively. Um, okay, well, I don't think there's any other questions. Thank you guys so much for watching. It is Friday, so I'm gonna let you guys get out of here early. Make sure you guys come join. There's a free Discord link below. Hit the thumbs up, and we do have our 50% discount going on. So when you join Discord, ask a question, message me or Faisal, and we'll hook you up with that 50% discount. All right. Y'all have a great rest of your Friday. Enjoy the weekend. Make sure you don't trade Bitcoin on Saturdays. Not investment advice. All right. All right. Cheers, everyone.
Take care.